Have you been told that by owning rental properties, that's how you save on taxes? Like it's the rich people's way to reduce their taxes down to zero and they don't have to pay any taxes at all? There's a little misconception to that. I'm Fook with Alpha Big Group, and today I'm going to talk about how rental property can save you in taxes, but a little slight twist on what tax savings really means. So with tax savings, there's actually two beliefs. The most common belief that people think is this one right here. It's where tax saving is about owing less money or having a bigger refund, such as I have a client that they usually owe $10,000, and what they say is like, well, what can I do to reduce it down to only owing $1,000 or breaking even? Or I have another client where they get a $1,000 refund. They're like, hey, my uncle gets a $10,000 refund. How come I can't get that? So that's kind of like the common belief when it comes to tax savings. And what I want to talk about is that there's another way to think about tax savings. And the other way is that how can you collect income but not pay taxes on that income? Pretty much tax-free income. So I'm going to go through the first belief right now. The first belief is that how do I make it so my rental property can help me owe less taxes or get a bigger refund? Now it's possible. The first thing, your rental has to have a loss on paper. If you have a loss on paper and your income is under $150,000, then you could take that loss against your other income, like your wage income, and what that will do is reduce your taxable income, which would then increase your refund or lower your balance due. But that's only if your income is under $150,000. If your income is over $150,000, now we have a problem because the IRS says that once income is over that $150,000 total income limit, then what's going to happen is that those losses get stored up into this like bucket. And then every year you have a loss, it just accumulates inside that bucket. And the only way you could utilize these losses if your income's over $150,000 is two ways. One is if all of a sudden the rental has a profit, so then now all those losses will go against the profit until it's used up. Or two, if you end up selling the property, all the losses that's in that bucket will get released and you can take one big rental loss against your other income. So this is the most common way when you think about tax savings with real estate. But for my clients, most of my clients are over $150,000, so this belief won't work. Instead, we have to go to belief number 2, which is how to receive money and not pay taxes on it. So this is the tax-free income I was talking about. And I feel like this is even way more beneficial when it comes to actual tax savings because you're receiving income and not having to pay taxes on it. So let's kind of go through the details of this. Let me move my face. Let's just say you have rental income of $3,700. And then you have these expenses right here, right? So with expenses, you got to think of it in two different categories. The first one is the necessary expenses that you need to upkeep the actual property and have the property. And two would be the kind of the creative expenses that I would call that will help reduce your income even further or your profit even further. So for this example, you collect $3,700 and these are your necessary expenses. You need to pay these to upkeep the property, such as mortgage, property tax, insurance, and repairs. So after all these expenses, your cash flow positive $1,000. So if you don't have any other expenses, you would pay taxes on this $1,000. But with rental property, we have this extra leeway to come up with expenses. The first one is going to be the easiest. It's going to be considered, it's called depreciation. And what depreciation is that when you buy a rental property, the IRS allows you to deduct the cost of the purchase of the building over time. So over 27 and a half years, you could take a little bit of deductions every time. In this case, the depreciation for this rental is $600 a month, meaning that you get an extra deduction of $600 a month without even actually fronting up this money. You never had to even pay this money for it. That's why I call it a phantom expense, because you're allowed to take this deduction without actually even paying for this actual deduction. As opposed to this repair, you actually had to pay $200 to someone to repair the property for you. In this one, you get $600 deduction just out of nowhere called depreciation. Now, the second level of deductions also includes these, I would call expenses that you're already paying for, but now you're going to get a tax deduction for it. So for example, when I tell clients when they buy rental property, they should buy it in an area where they're going to visit a lot. So for example, for me, I like to go to Las Vegas. I'm going to buy a rental property in Las Vegas. That way, anytime I go to Las Vegas, I just have to make sure that I visit the rental property. I'm doing something with the rental property, visit the management company, evaluate the rental property, make sure that it's clean, or talk to a tenant, do something with the rental property so that way my travel expenses are deductible. So if I'm in Vegas for 4 days, I'm making sure in all 4 days that I'm able to do something with the rental property. Maybe the first day is talk to the management company. The second day is talk to the tenant about what repairs needs to be done and kind of do the review of it. Maybe the third and fourth day is reviewing, making sure I follow the repairman to make sure that they're actually doing the job correctly and that the thing that needs to get fixed is fixed, right? So it's making sure that I spend those 4 days on the rental property. That way, all 4 days is going to be deductible. So my hotel stays, my flights, everything's going to be deductible. I could only spend 2 or 3 hours a day on the rental property, but then the rest of the day I could just go out and still enjoy myself. But definitely got to make sure that there's a business reason for that travel, or the rental reason for that travel. The other thing I want to talk about is paying like teenage kids. This is just an example. So what I could do is pay my teenage kid helping me with maintaining the rental somehow, whether it's collecting the rent, making sure that rent's being collected, sending out emails, reviewing expense reports, doing the bookkeeping for it, whatever it is. It could be very simple. And what this is it's to replace that I'm already paying things that I will pay for my kids anyways, meaning that if I'm already paying for their clothes and their food, instead of me paying that out of my own pocket directly, what I'm going to do is, okay, I'm going to say the rental is paying my kids for the help $200, and then my kids will just go out and go buy their own clothes and food, right? So these are expenses that I'm already paying anyways. Now I'm just shifting the money and how it's being paid from the rental to paying the kids, and the kids just paying the items on their own. So it's really important that we could be very creative on this, as long as the kids are actually doing some kind of work for the rental and it's justified to pay them $200 a month. So in this example, I was cash flow positive $1,000 after paying a necessary expense. Normally, I would just pay taxes on this $1,000, but because it's a rental, I know that I have depreciation and I could come up with other expenses that will help me reduce the taxes even more. So after these expenses, my taxable income is actually zero, because I paid all this phantom expense that everyone gets, and I also paid these expenses that I'm already paying out of my own pocket that I normally would pay for anyways, but now I'm using it as a business expense. So now out of the $1,000 I received, I'm paying zero taxes on it. So this is why it's so amazing to have a rental property, because if you were to receive $1,000 from like $1,000 bonus from work every month, you're going to pay taxes on the $1,000 bonus every month. But with this rental property, I'm receiving $1,000 every month in cash flow positive amounts, and I don't have to pay any taxes on it because I have these extra deductions to go against it. So I pay zero taxes on that $1,000 every month. So to me, that is a greater benefit than trying to lower your tax bill every year. But having this tax-free income is how you want to think of rental property and how it benefits you in taxes. Is that, yeah, with most of my clients that income are over $150,000, they're not going to be able to lower the tax bill by having rentals, but they're going to be able to have a lot of tax-free income from their rentals. I hope you found this video helpful and useful. Give it a share and a like, and I'm off to my next video.